Hi there. So before we start the 13-2 work together, I wanted to quickly pull up this one slide and talk about unemployment tax. The one thing about unemployment tax that seems to confuse students every year is the fact that only your first $7,000 is subject to unemployment taxes, and it's not the employee that pays it, it's the employer. So you'll never see this come out of your paycheck, but it's something that the employer has to keep up with. And again, they only have to pay it on the first $7,000 that each employee makes. So you have to look back and see what their prior earnings are to determine whether you have to pay any federal or state unemployment tax on their earnings. So if you look at this example, John Butler has already made $27,000, so zero amount of his current pay is going to be owed FUTA taxes on. FUTA stands for federal unemployment taxes. The next guy, Anthony Fang, he has made $5,200, so he's got $1,740 to go before he gets to that $7,000 mark. So if he made $1,494, then that whole amount is going to be subject to that FUTA tax, and so forth. So we keep going on. This person's only made that amount of money, so she still has $5,000 to go before she hits that $7,000 peak. This person's made $44,000, so none of his pay is any subject to FUTA taxes anymore. This one's also over $7,000, so none of his is subject to FUTA tax. This person is $6,490, so he only got $510 to go to get to that $7,000. So it doesn't matter, that he made $1,444 this pay period. Only $510 is subject to that FUTA tax, because that's all he has to pay is up to $7,000, and it only is going to take $510 to reach the $7,000 mark. So hopefully that will help you a little bit with this next section. So here we go right into the work together, and what we're going to do is kind of similar to what we were just looking at. We're going to look at all these people's pay, and so this person's already made $6,100. So again, they only have to pay up to $7,000, so he's $900 away from the $7,000 mark. He made $762.50, which means they're going to have to pay on that whole $762.50 because he still won't be up to $7,000. Okay, this one has made $7,980, so he's already over it. He's earning equal to the FUTA tax pay, zero. They don't owe any more taxes on him. Okay, the next person has made $4,380. They're $2,620 away from that $7,000 threshold. So therefore, that whole $527 that they earned this pay period is going to be subject to those taxes. The next one, Carrie Wolf, has made $6,850. He or she is only $150 away from that $7,000 mark. So even though they made $849.50, they only need to pay on $150 of that, because they're only $150 away from that $7,000. Okay, so these two have to be totaled. This one is $3,100. So I've totaled the two of those up for you. I'm going to grade our step. All right, so the next step is we're going to actually start calculating the payroll taxes. Okay, so federal and state unemployment taxes are both percentage taxes, percentage of the total. So their total payroll is $3,179. So If you multiply it by 6.2%, you get $197.10. If you multiply the $3,179 times 1.45% for Medicare, you get $46.10. Moving down. Now, for the next two, we're not using that amount, okay? Because remember, some of them had already made over $7,000, and that's why we kind of figured out for each one of them how much money they were going to owe on federal unemployment taxes, okay? Because we don't want to have to pay more than we need to, okay? They'll probably take it if you do, though. So we're only calculating on $1,439.50. That's all that's subject to unemployment taxes. So it's 0.8. Be careful with your amount here. It is not 0.8%, because that would be 0.8% is like 0.008. So be careful with that on your calculator. It's going to be a small amount, $11.52. Okay, and the next one for state is 5.4%, and that one's $77.73. And then we're going to add them all together, $332.45. Okay, so all this right here is what the business is going to owe on payroll taxes, because I think I talked about it last time, but I'm not sure. But not only does the business, you have to pay Social Security tax, but the business has to match it with Social Security and Medicare. So not only 6.2% of your salary coming out of you, but your boss has to match that 6.2% and the 1.45%. So these are payroll taxes that the employer will have to pay. And so that's what we just calculated. For this payroll, this employer is, their portion of your taxes is an additional $332.45 on top of your earnings. Okay? So the last step is we have to journalize our portion, or the employer's portion of payroll taxes. Okay, so it tells us in the direction that we're doing this on May 15th. Okay, and these are payroll tax expenses. Taxes, expense. And the document number is memo 46 M46. Okay, so the expense item is, as we look at over here, is going to be the whole amount. Our payroll taxes are $332.45. And then we're going to go line by line for our credits and put each one in there as our credits, because they're payables, okay? So we got Social Security, tax payable, and that's 46. Oops, that is $197.10. We also have Medicare tax payable. That's $46.10. Then we have unemployment tax payable dash federal, and that is $11.52. And the last thing we have is unemployment state, and that is $77.73. Okay, so of course all these will equal up to that, and that journal entry is necessary because we had to record the fact that now we owe our portion of the payroll tax expense, which is $332.45. All right, so that is 13-2.